Okay, in this section, I'm going to talk about stop losses and how we take profit levels, or how we look at potential trades, getting into trades with this strategy. Now, let me put these on. So one of the things I look at, if we're looking at this trade here, and I mean, we don't know where it's going to go. We haven't really analysed it, but essentially, if we go in for the buy, so what we would do, we go into this little symbol there, we'd click it, and we'd go long. Okay, long is buy. So where the price is right now, okay, that's where the price is at the bottom of this wick because it's a sell. Okay, and typically what we're looking for a stop loss first. That's the first thing we're really interested in. One of the things I look at is, first of all, the stop loss. Secondly, we're looking for a 1-to-2 ratio. And thirdly, we're looking at where price may well potentially go before we get into a trade. And if you follow any of the trades that I do on a daily basis, you'll see the process I go through. It's always the same process. But essentially with this, if you look just down here, what you'll see these engulfing candles, and this engulfing candle and this line has been generated by the straightforward Forex indicator. And what this gives us, it gives us potential stop loss areas. Okay, so if I take it to where that is right now, it's 4.1 pips. And one thing I'll say is that 4.1 pips is a little bit tight for this time frame. It's a 2-minute time frame, and it's a little bit tight. What I always like to do, a good number is around 7. I mean, sometimes it's 10. It really depends on the price action at the time and what's really happening. But if we take it down to the bottom, see this engulfing candle here? It's given us that green line. Okay, we've got 5.7 pips, and let's go with that. Okay, as a general sort of stop loss. So now what we're looking at doing, we're looking at taking this up. Okay, and we'll see this number here. So it says risk reward ratio. Okay, we want that to be 2. There we go, 1-to-2. So there is the 1-to-2 ratio based on this. And it's not a trade. I'm just showing you for illustration purposes how I would enter a trade. Okay, so I'm looking, first of all, I'm not interested in pips. I'm interested in percentage. Okay, percentage of loss 1%, percentage gains 2%. Okay, 1-to-2 ratio. And if we look at this, if I was in the trade now, I'd be looking at this area here, looking at this high. Okay, and I'd be saying, okay, the high is say there. Okay, we're happy with that as a high. Now our take profit level is above that high. Okay, so the way that we would reduce it is that we would look at the price action. We would reduce our stop loss. We'd bring the stop loss to maybe just below this engulfing candle here. Okay, and then lower it to a 1-to-2. Okay. But this is what I mean. It's like the analogy I give, it's like walking into a house that you want to do up to sell. It's one thing I used to do, and knowing your numbers. Okay, you walk in and you go, okay, I can buy this house for $20,000 or £20,000. It's going to cost me $20,000 to do it, and I can sell it for 65. Okay, the numbers work. Okay, so you've got to do the same sort of thing when you're trading. You've got to look at the numbers and say, do the numbers work? Okay. Because what will happen with this price, if it goes for the buy, okay, let me just move this out of the way. If this price goes up, it'll reach comfortable. I mean, eventually it'll go to there, okay, but it won't go above it unless you look further left and do some further analysis. But that area, okay, this area of interest is going to be a resistance zone. And what I always say is forget about your optimism bias. Okay, so bring that further down, okay, maybe even to there, and say, okay, have we got enough, is there enough legs in this trade, okay, to get in the trade for this particular trade? And sometimes there isn't, and sometimes we can look at a trade. Okay, so we'll look at that trade, we'll look at the next area of interest, we'll measure the pips. So measuring it from where it is now, oh sorry, no, do that again, and again. Right, so measuring from where it is now, so the bottom of this red candle, and we put it on, and we've got 9.3 pips. Okay, so what you've got to look at is, first of all, you've got to look at your broker spread. How much is the broker going to charge you for it? And they'll tell you on your MT4, your MT5, whatever you're going to use, and they will tell you the spread. And usually the spread can be 1, 2, 3 pips. It depends on when you're going to get into a trade. But essentially, you've got to factor that in. Okay, so let's say it's 2 pips. Okay, you've got seven pips of profit to this area here, and there isn't enough in it. So we've walked into the house and there isn't enough in it. Okay, they want 40 grand for the house, you know, and they want 25,000 to do it up. That's maxed out at 65,000. We can't do it. Okay, so we don't get in. Okay, but essentially, the takeaway for this is we look at our stop loss first. Okay, and we just look at a percentage gain. Okay, so if you concentrate on managing your account first, that is the biggest thing I can say about this. And one thing I used to do when I first started trading was I used to sort of think, okay, I'll take 10 pips. I'll take 10 pips and maybe I'll risk 10 pips as well. What's the point in doing that? When you look at the maths involved in that, okay, statistically you're going to break even or lose. Okay, whereas if you've got a 1-to-2 ratio, if you look at the maths and you do it right and you manage your account properly, you can do well with a very low percentage of win rates. Okay, so it just makes sense. All right, so that's it really. Look at, you know, where your stop loss is first. So again, if we want to go in for a sell with this, okay, as an example, we'll go short. Okay, we'll put it where the price is right now, at the top of that green candle. And the first thing we're looking at for a short, okay, is our stop loss. So we've got the line here, okay, that's been generated by a straightforward Forex indicator, giving us, you know, potential stop loss areas at the engulfing candle, which is, I mean, that's really tight, right? It's 2.3 pips. The one up here is 4.8 pips, and I would say that's even a bit too tight. So maybe take it just above these areas here, and then we're starting to get into our sweet spot of around 7 pips. It's always nice. Okay, then we're going to come down to 1-to-2. Okay, so we look at the 1-to-2 ratio, and at the time we've got to look at price action and say, what is the potential of price going down to this level? Okay, and as you can see here, we've got these lower lows here, and we've also got this. I think that's the trend line, isn't it? Yeah, that's the trend line from earlier. So we've got these lower lows. The trend line is still going to be relevant, okay, because it's still an area of interest. However, we've got this price action that comes down, okay. We've got the 200 moving average, okay, so you're gonna find resistance at the 200 moving average. You're going to find resistance around this area here, and then potentially it could well go down to these areas around here. Okay, so when we do all the assessment and we look at where price may well go based on previous price action, we can see that maybe, okay, eventually, depending on which way it was going to go, okay, it could reach down to here, which is clear of our take profit level. So we could look at that, make an assessment and go, this could be a potential sell in that direction. But again, the only way to really determine that is to get on the charts at the time and first of all look at your stop losses, manage your account properly, and then go from there. But the best way to do it is just join me on the sessions, and also start doing the trading and the back testing for yourself, and just start on demo account and just do, you know, repetition. And what you will find repetition, you will find patterns in the numbers, and you will find, you know, the similar patterns come up and you'll start to identify them, and it really makes a big difference. It's just repetition doing that. Anyway, I hope that helps. That's how we determine stop losses and take profits with this strategy. If you're not yet subscribed to the channel, hit the subscribe button just below there. And again, if you've got any questions, please reach out to me. My text number is there, and also if you comment below, I'll always see about replying. I always reply to all the comments that come in. So any questions, let me know, and I'll see you on the next module. Bye for now.